All right, everybody, we're live. Welcome back to NFA Live. As usual, Thursdays, here we are. I've got Ben from Into the Cryptoverse. Ben, how are you doing?
Pretty great. How about you?
Not too bad. I'd like to see my bags pump a little bit, but can't ask for everything. And of course, Guy from Coin Bureau. Guy, how you doing, buddy?
Bags aside, I'm absolutely splendid. Thank you, Rob.
I'm feeling pretty good too. So anyhow, guys, we got a lot of things to go over, so let's just jump right into it. First, we're going to talk about the Saylor FUD to see where we actually stand. Also, there was this great video that Aaron over at Coin Bureau Trading put out about the 4-year cycles, and it looks like we're kind of undervalued, so I want to talk about that. And then we'll talk about some rate cuts and just kind of see like where we are in the cycle. So let's just jump into it. So first of all, this question has come up recently. And it comes down to, I'm not a finance guy. I'm just not. I do own some MicroStrategy shares, but it looks like there's been a big uproar about what Michael Saylor did as far as the change in the valuations as to how they issue stocks and such. This was from a couple days ago or last week, or actually 4 or 5 days ago. Michael Saylor put out Strategy today, announced an update to its MicroStrategy equity ATM guidance to provide greater flexibility in executing our capital markets strategy. And as far as like the net asset value, it looks like before it was below 1.0, Strategy issues credit to purchase MicroStrategy. But then there was some changes where above or below 2.5x, they will tactically issue MicroStrategy stock to pay interest. Between 2.5 and 4.0, will opportunistically issue MicroStrategy to acquire Bitcoin. If it's above 4, they're going to actively essentially put in more MicroStrategy stock to buy a boatload of Bitcoin. And people are saying that this isn't a good strategy. But then there's people like Jeff Walton, which is saying this is fundamentally strong, especially because MicroStrategy is going to come in and be listed on the S&P 500. He states that thesis is unchanged. I continue to argue that risk is mispriced globally. Bitcoin could fall 50% from here, and MicroStrategy would be less leveraged than a typical S&P 500 company. And also, they state somewhere at some point that the MNAV is around 1.42 or 1.5x. So I just want to get your opinionation of this as far as like where we're at. Is this a big thing? Because MicroStrategy's stock has tumbled after this revelation. And do you think this is something that we should be concerned with, or Bitcoin doesn't care? And who wants to take this one first?
I mean, I can comment. I think maybe what's happening is, and I could be wrong. I haven't really done a ton of research into this, but I think maybe Saylor slightly overestimated the demand in the short term, and that's caused him to change their strategy, so to speak. But I don't really necessarily think that's Saylor's fault. I mean, there's also kind of in line with what you said earlier. You said someone over at Coin Bureau made a video about the 4-year cycle. It's kind of in line with that idea, right? Like that, like, demand kind of falls off as you get closer to the midterm year, and we go through a bear market. And what the guy said, Bitcoin could fall 50% and MicroStrategy would still be less levered than some of the S&P 500 companies. I don't actually know. Maybe that's true. I haven't actually looked at it, but I mean, like MicroStrategy, they already survived one bear market.
True.
And during that bear market, their Bitcoin holdings went below their cost basis, right? Like they were they were sort of in a loss, I believe, on their Bitcoin holdings in the 2022 bear market. So arguably, if there is a 2026 bear market, there's not a guarantee that it's going to completely wipe them out, right? When it comes to Bitcoin, though, just to be completely honest, right, I just stick with Bitcoin. I don't really go after a lot of these companies that are holding it. And it's not that I'm against those companies. I mean, in fact, MicroStrategy has significantly outperformed Bitcoin this cycle. I mean, it's not even close. So props to those who were able to catch that move. It's more so, it's kind of the same view that I have for, a lot of assets in crypto, right? Like in 20 years, Bitcoin could be around, but it doesn't mean that any altcoin is around, or it doesn't mean that any companies where their sole purpose is to buy Bitcoin necessarily is around. So I think that we're sort of in a situation where Bitcoin doesn't need any of those things to survive, but then a lot of those things need Bitcoin to survive. So that's kind of where I am on it. I'm not really looking at it as something I'm looking to pick up myself. I will say though that price or that narrative follows price, and there was also a pretty big drop in the MicroStrategy stock in August of 2024 as well. So, I don't know if there's going to be another, big rally or not. I mean, I for MicroStrategy, I think one of the issues that MicroStrategy had is that the rally they had like a year and a half ago was so significant and so explosive that it's had a hard time. There's been a lot of sellers ever since that rally, and it never even recovered to all-time highs, right? But to be fair, Bitcoin has not recovered to all-time highs on all of its fiat valuations. Like, it didn't return to all-time highs on its euro pair, which is kind of a crazy thing to think about, right? But it did on the dollar. And so I guess the argument there is that, it was a devaluation of the dollar more so that sent Bitcoin up, because it still hasn't made new all-time highs on the euro. But look, those are my thoughts. I think that, they're probably going to get a little bit more creative in 2026 because demand probably won't be as high. But again, they survived the 2022 bear market. So if there is one in 2026, there's still decent odds they could survive it.
Yeah, it makes sense. I mean, they've come this far. They are a little bit battle tested, I could say. Guy, same question, but I'm going to throw a little wrinkle into it. And this is from, there was a post which talked about back in the Las Vegas Bitcoin conference. And Saylor was asked a specific question, which is about the Bitcoin proof of reserve, since they hold 580,000 plus Bitcoin. And Saylor's response was this: he's not in favor of putting out proof of reserves, stating it dilutes the security of the issuer, custodians, exchanges, and investors. He compared it to publishing the personal information of one's family, suggesting it would not enhance security, but expose vulnerabilities. So there is no proof of reserves, and I find that odd, but maybe I'm just not thinking this through. But if I don't have proof of reserves, I'm a multi-billion-dollar company. And Michael Saylor said, well, there's some vulnerabilities there. And also, as far as like staffing, we have to put somebody on there. If you're a multi-billion-dollar company, I'm pretty sure you can do it. But am I missing something here? And what else do you think about what Ben commented on?
Yeah, I mean, in terms of the proof of reserves or the lack thereof, I mean, that screams "trust me, bro," doesn't it? I don't buy that. I don't buy that argument that revealing proof of reserves or the wallets that this Bitcoin is held in. I don't see how that is going to affect. What does he say? Like the families of people or something like that. It's like I kind of feel like if all these exchanges have to do it, and these big holders in whom us as crypto users have to place a high degree of trust, even though, of course, those of us who are doing it properly are self-custodying our own Bitcoin. We still, as Ben says, we use exchanges like we use public toilets. But whilst we're there, we need to trust them. So I kind of feel if entities like that, if the likes of Coinbase have to publish proof of reserves, then why shouldn't MicroStrategy? When when they own an absolutely ungodly amount of Bitcoin and intend to stack more and more, as you say, this is a multi-billion-dollar company. There should be a way of doing this, of proving that they own the assets that they claim to own, without compromising security or MicroStrategy employees or whatever it is he's getting at there. I find that I don't really buy that argument, and I think strategy should be held to the same standards as everyone else. I don't see what makes them special, other than the fact that they're headed by Michael Saylor, who's obviously Bitcoin's high priest, and in him we trust. But yeah, so that's my feeling on that. I feel it should be to the same standards as everyone else, because that's only fair and right. In terms of just to add on to what Ben was saying about strategy in general, I do wonder whether this sort of latest move, whether Saylor sort of hasn't maybe slightly misread his audience here, because I say this because I was listening to a podcast just yesterday or the day before, and the guys on it were talking about how, with this meta of DATCOs, treasury companies accumulating crypto, and of course ETFs and Bitcoin options and all these other products, the big players at the moment are institutions. They're TradFi people. And TradFi people, as these guys pointed out, TradFi people have a very, very different outlook to crypto people. I wonder if Saylor was sort of thinking like, yeah, I'll just say I'm going to buy more Bitcoin, and my orange-pilled, laser-eyed legions of followers will just be with me, because that's what I do. That's what they love. That's what they're here for. Yeah. Whereas people buying MSTR and all these other various forms of preferred stock, a lot of these people aren't crypto people, and are probably sort of like, we like a bit of certainty here. We like it when a company or a CEO or whatever Saylor is, president or whatever, a company does what it says it's going to do. And I think sort of backtracking and say, actually we're going to stack more. Like Ben said, maybe he underestimated demand or overestimated demand. Who knows? But I do wonder whether it's a slight sort of misreading of the audience. It's like you're dealing with TradFi people now, and they feel very differently to the legions on crypto Twitter.
I have to agree. I think with TradFi, it's not like they have the most stellar record. Just go back into the Great Recession and just how much they messed things up over there. I just don't think they get it yet. I think they will at some point, but I can never tell you the time. So well said on both. I'm not going to add more fuel to the fire and just say, do your own research, everybody. I'm hoping everything works out. Things are looking pretty good, but anybody knows. And one thing I will say is, like, some people say, well, this time it's different. Well, I don't know. There was this great video by Aaron over there at Coin Bureau Trading, and he laid out why that the Bitcoin bull market is almost over. And he took a look at some different indicators and just how things have played out. And it's not like he's saying it's going to happen in like the next couple of weeks. He's pretty much saying and talking about, hey, this could be like a 6-week to the end of December type of thing, maybe even October. And I linked this video in the description. You can check it out. I know Ben just had another one talking about the Ethereum and Bitcoin valuations, which are kind of lining up as well. But I want to start with you, Guy, because we just were talking. Where do you think things are as far as the cycle? Do you believe in the 4-year cycle? Do you think it's the same thing? I'm guessing maybe you and Aaron have probably had this discussion. Where are we?
Well, I'm believing in the 4-year cycle until proven otherwise, because that's all I have to go on. Now, I only have to go on past performance. Obviously, past performance is not indicative of future returns, as the old disclaimer goes. But so far, we're sticking fairly close to the model of the 4-year cycle. Now, there are plenty of reasons to say maybe this time is different, and I personally do think that, in terms of market structure, in terms of all these, like I mentioned earlier, this institutional involvement, these products that are aimed at corporations, institutions, options, ETFs, treasury companies, etc. I do think that has fundamentally changed the structure of the market, and I do find myself wondering in idle moments, well, does that mean then that, yes, the 4-year cycle is going to be disrupted because we're playing a fundamentally different game now, and the players are different? This isn't a sort of little backwater of the internet anymore, populated by a few mentally ill people. Like, this is a lot of mentally ill people, but also TradFi and serious money. So that makes me wonder whether it might be different. But until I see evidence of that, I'm going to work to the assumption that it probably is going to follow the 4-year cycle. And of course, as we discussed the other week, there's evidence to say, or some people would argue, that the 4-year cycle it isn't actually related to Bitcoin or the halving. It actually just moves with the global liquidity cycle and the business cycle. And we've sort of it just so happens to be kind of pretty much to move in lockstep with that, rather than being unique to Bitcoin and to crypto. But yeah, I kind of feel probably we should steel ourselves for the fact that we may only have a few weeks or months left. The top may not be in yet, but it could come very soon. And plan accordingly, because if we get, people have to make their own decisions, and I for one am not planning to sell everything. I'm planning to get out of a lot of altcoin positions, but Bitcoin is something I hold for the long term. So I would again, as I've said many times before, I hope for the best and expect the worst.
Yeah, I would go with that. I'm hoping for the best, expecting the worst. Ben, same question here. I know you've been doing a plethora of different videos about if this is going to play out, and it looks like it's kind of playing out in that same way. I'm not for sure this is going to be the extended super cycle people are talking about, but I'll throw another wrinkle into there. I know people have been talking about ETFs, and they compare it to gold. And because of the gold ETF, which was in 2004, because of the numbers that pre-ETF, there wasn't institutions buying. Now there was institutions buying as far as the ETF. So that's going to be the same thing with the Ethereum, the Bitcoin, and the Solana ETF. However, just yesterday, we had a sell-off. Actually, the last 3 days, BlackRock had over almost $400 million worth of a sell-off for their ETF of Ethereum. And then for Bitcoin, yesterday they had 220 million. Across the board, it was a combined 315 for yesterday, 523 million negative for the 19th of August and also 18th. So what are your thoughts here as far as like, is this the same thing? And are ETFs going to save us because all the institutions are here, even though institutions like BlackRock and ARK also have bought their own product? They have their ETF and they are actively selling off along with their clients.
Yeah, I mean, if you throw my screen up, we at least have a couple of charts to look at. I think the reason why people are saying that is because, if you look at like the timing of things, it sort of seems like it's playing out like normal, just with under the construct of diminishing returns. These are the last two market cycles here, and the last cycle ended on day 1059, and the cycle before that ended on day 1067. So within about 8 days of each other, and we're currently on day 1016, right? So that's where, that's sort of where that October timeframe is, I imagine, coming from. And I think I actually did a video about this a few months ago. I mean, I talk about, the cyclical stuff every so often. And, normally, I mean, you guys have been around in crypto for a while, right? We've seen the markets peak out oftentimes in Q4 of post-halving years. Obviously, this time could be different, but it's one of those things where it makes sense to at least be somewhat cautious about that idea. So if this is how you measure it from the low, then you can see, we're kind of getting pretty close to what you would consider the end of the bull market. If you measure it from the peak and you go peak to peak, you can also see like we're getting kind of close, and one of the things that I think, in order for this cycle to feel a little bit more complete, I think that Ethereum would go put in all-time highs. That's kind of what I'm thinking. And if it plays out like past cycles, then you can see the rally that would come for potentially Bitcoin, maybe in a little bit, that could allow Ethereum to hit those all-time highs. If you look at ROI from the halving, right, you can see where we are compared to the last couple of cycles. So, no matter how you measure it, whether you measure it from the low, whether you measure it from the peak, or whether you measure it from the halving, it does suggest we are getting closer to the end. One of the things that I think people have gotten a little spooked by is that the same pattern that played out last cycle. But I will say, like, one of the things that I've noticed is that the end of the bull market for Bitcoin every cycle seems to be a little bit different, right? Like it's not always it doesn't peak always the exact same way. But just for reference, what a lot of people have talked about is, sort of this first peak, and then you get a sell-off, right? So you have sort of your first peak, and then you get a sell-off, and then you just go up into the market cycle top. So I think it does make sense for people to go into the next few months a little bit more aware that, hey, like that could be it. The good news is that if, whenever that does happen, and if we do get a bear market, I would assume that we'll have diminishing losses, right? So like I wouldn't expect the bear market to be as bad as the last bear market. And the reason I say that is just kind of the same thing, right? Every bear market has gotten a little bit more manageable. The first one was about 94% down. The second one was about 87% down. The next one was about 84%. Last one was actually about 77. So, I mean, look, it's not fun if Bitcoin drops 70%, but I mean, at least there's a big difference between 70% drop and a 94% drop. And I think a lot of us have experienced that, right? Like, you know, a lot of us have experienced those differences. Altcoins often can drop, right, 98%. I would expect that to still happen. But I wouldn't expect, you know, Bitcoin to necessarily get as, you know, I mean, the diminishing losses idea hopefully would continue to play out in line with diminishing returns. So I think that's where it's coming from, right? Like, it's important to know like where these people are coming from when they're talking about, hey, could it be over soon? They're basically just looking at, hey, this is what's always happened, and it makes sense to be open-minded to it happening again, you know? So we'll see. I mean, normally what happens in post-halving years is Bitcoin, you know, does well in July and August, and then it pulls back, you know, 20-30% in September, and then you have sort of the final rally into the cycle top. So is this time different? Let's stay tuned to find out.
Stay tuned. Exactly. I like what Bison says. He goes, I would prefer the 94% drawdowns. And if this is your first cycle, just as a reminder, back in July 2020, this was on April 16th or 17th, 2021 to July, we dropped 50% on the Bitcoin price. It went from 63,000 to roughly around $29,000. So if you'd like to see something like that, and you compare it to today where you're like, bro, we were at 124, now we're at a measly 113,000. This isn't bad. So
I think if it were to drop 94%, it might kill the market for a little bit longer than people are thinking. Because like, I mean, something like that, like going back to the MicroStrategy topic, right? Like when I say MicroStrategy could survive a bear market, I mean, I think they could survive a 60 to 70% drawdown in the price of Bitcoin. Could they survive a 94% drawdown? I don't know about that. And if they get forced to liquidate, that could kill the market for a while, I think. So hopefully that's one of those things, like, be careful what you wish for, because like if that happens, I don't know. I mean, how long? I mean, it'd be one of those things where it might take a generation for people to actually have confidence again.
It's like, oh yes, you want to buy Bitcoin at a discount. It's like, well, not that much of a discount.
Yeah, exactly.
I said a discount. I didn't mean bargain basement. Well, I guess as well, what potentially causes this? I mean, do we just see a drawdown in prices because that is the way of the cycle? You know, people just decide that's it. I'm out. I've had enough. I'm in profit. I'm not in profit. Whatever, you know, and sell. Or do we get some sort of catalyst like we got last time with, all these lenders going bust, and then FTX to sort of, you know, crown it all off? Because I think a lot depends on that. And, you know, you might say that strategy is a potential catalyst. I would think that probably strategy wouldn't be the entity that caused it. Wouldn't be the initial disaster itself. But obviously, as Ben says, you know, if things got so bad that strategy was underwater, that's when it might be time to jump ship. But what actually causes a bear market? Does the market just roll over, or do we get some sort of SBF? You know, does the SBF of this cycle poke his head above the parapet and screw us all to hell?
Man, let's hope not. So that's looking, and Guy well said, that's looking way ahead. Let's look a little bit closer and take a look at rate cuts, because this was from Polymarket. I didn't know this. Morgan Stanley says the Fed won't cut rate this year. Now, take this with a grain of salt. Morgan Stanley isn't perfect. They sure as heck aren't correct all the time, but they're saying no more rate cuts. Polymarket, though, says, and I have to kind of tend to agree with Polymarket, they did call the presidential election right when a lot of people were calling it wrong. Fed rate cut in 2025, 88% chance. looks pretty good to me. And then this is from the official account from Guy over at Coin Bureau. Just now, the Federal Reserve official Bullard says, I do think they'll cut in September. I don't know who Bullard is. I guess he's probably a candidate for chair. That's probably why he's saying it. But then if we take a look at this is interesting, the CME group, as far as the probabilities for a cut in 17th of September, it was 84% yesterday. Now it's down to 77%. Guy, I'll start with you since you were talking. What do you think about this Fed rate cut? Because if we get Fed rate cuts, I mean, this would actually be bullish for the market.
Yeah, it would perhaps depend on the size of the cut. I mean, I kind of think a 25 basis. I kind of think maybe what Powell and co could do, to sort of try and keep everyone happy, would just be to make one 25 basis point cut, which really I don't think would add up to a hill of beans in the grand scheme of things. But it might be enough for them to say, "Hey, we cut rates. It's all good." But as Powell says every time, they're data dependent, and I think there were words to that effect. He's speaking tomorrow at Jackson Hole, I think, isn't he?
Oh yeah, that's right.
But I imagine he'll be playing the same record he's been playing for the last couple of years. Like if the data points to cuts being possible, then they would consider it. But then, what was it? Just last week. The PPI, in fact, maybe last week when we were doing the stream, that PPI data came out. It was almost the regular CPI was almost a whole percentage above expectations. Now, obviously, the CPI was pretty much in line with expectations. I don't think anyone was too unhappy about that. But the data suggests, and the PPI is what the Fed prefers. That's the measure that they supposedly pay more attention to than the CPI. That data was really not good. And if it comes in bad again, if we get another jump, then I would say that Powell will do everything in his power to hold his course in the face of mounting pressure from Donald Trump, who I think has now said he plans to sue him, which is how you guys seem to solve things on your side of the pond. Just sue. Just get the lawyers involved.
America.
But yeah, God bless her. It just seems. I think we've just got to watch that data like Powell is, and Powell will do everything in his power not to cut rates if the data doesn't show inflation trending down again significantly. I would say
significantly, and I think Jerry said it right. That's great, and they're data dependent. The data is flawed. And
yeah.
we just took a look at the jobs report, and I think we lost, there was a revision from the last meeting to, I think it was 4 or 5 days later, where they lost somehow around 250,000 jobs because there was just incorrect data. And then I think yesterday the minutes came out from the FOMC meeting, and they were talking about how the Fed Reserve, all the different board members were saying that they were more concerned so much with the inflation and not so much with the jobs, because that didn't come out until later. So people were looking at that going, they're not going to cut. There's a little minute things, but Ben, what do you think here as far as Fed rate cuts? Do you think 25 basis points on the table with all the data? Or do you think maybe Jerome is going to say, you know what, not going to happen?
I would say there's a good chance they'll do it unless you get another bad inflation print. I think the Fed is more. I think they care more about core PCE than they do PPI, because core PCE is more so related to the consumer, whereas the PPI is more so related to sort of upstream inflation, like producers. So what I think, in terms of Guy was also saying, like, what would be if there's a narrative for a 2026 downturn, I think that would be the narrative. It'd be, they cut in September, they maybe cut again, but I think they're going to run into an issue where the long end of the yield curve is going to go up after they cut, just like it went up last year after they cut, that everyone seems to have conveniently forgotten about. And I think that, then people start to slowly get the memo that, hey, like, we can't just, we can't, cutting interest rates isn't necessarily the solution for everything. And that's the thing, is like, well, you have Bitcoin essentially at all-time highs. I mean, I know technically it's not right now, but it was a couple of weeks ago, right? So you have Bitcoin at all-time highs, you have Ethereum near all-time highs, gold's near all-time highs, the S&P's at all-time highs, the Nasdaq's at all-time highs, and yet we're cutting rates, right? So I'm not saying like you can't cut rates, but when you cut rates, normally the Fed cuts rates into a weak economy, not a strong economy.
Right.
So it's one of those things where you can't really have it both ways, right? If you demand rate cuts, that's sort of saying, well, the economy's weak, because the Fed hikes into strong economies. And remember, the Fed did hike in 2022 and 2023 and 2024. And while the narrative was that it was a weak economy, the economy has actually been, better than I think a lot of people expected over the last couple of years. So I would say they're probably going to cut, and the bond market's not going to like it, is what I would say. The market might not care about the bond market right away, but maybe by 2026 they'll start caring about the bond market. And then my guess is that Trump will replace Powell with someone to do his bidding and cut rates even more. And that's a good reason why next cycle, Bitcoin dominance, Rob's favorite topic, will likely top out sooner than it did this cycle, because there's going to be a much more dovish Fed chair. I could kind of see that. It seems like in crypto, we do kind of an every other thing, right? Like this cycle has been more like the 2016, 2017 cycle in a lot of ways. Right. And where dominance was just kind of stronger and Bitcoin outperformed most things for a while. But then next cycle, I could see and another reason why dominance will probably top out a lot sooner next cycle is because a lot of people saw what it did this cycle, and so they're probably going to be more quick to realize that trend when it actually happens. So my guess is they're going to cut unless core PCE, if CPI and core PCE, if those come in next month before the Fed meeting and they follow suit, and like if that stuff jumps up, a lot, just like PPI, then maybe they won't. But I think at this point you have to go in assuming they're probably going to cut 25 basis points. But one more thing to consider is the 2-year yield is a good estimate for the neutral rate, I think. And the 2-year yield is around 3.75%. So even if they cut 25 basis points, we're still going to be about 50 basis points away from the neutral rate, theoretically speaking. So just something to consider.
Yeah, definitely something to consider. And it's just like what you said, next CPI data is on September 11th. FOMC in September. I guess we'll be watching that very closely and go from there. All right, gentlemen, well said, both of you. Let's get into the last question and we'll get into Q&A, which is the valuations. I need your help because when I take a look at the crypto market cap and trend line, it doesn't seem like it is. There is a massive overvaluation, usually for blow-off tops, right? We saw that in 2011. We see it in 2013. We saw it in 2017. And for those of you who are squinting, let me see if I can put it in there. This red line is the fair market value band. And we can see as it's going here, the markets get frothy. It happened in 2017, happened in 2021 twice. But here we are, and we're actually, let me zoom in. We are undervalued as of right now, which is kind of odd. So where do you think things are going? Of course, we talk about diminishing returns, but as far as undervaluation, where should we be? Is this it? Is this the right? And what are your thoughts, Ben?
So if you look at all the prior cycles, we stay around the fair value until alt season happens, right? So normally the market doesn't go durably overvalued until altcoins join the party. And, I'm not talking about your alt, but most altcoins haven't actually kept up with Bitcoin in any way, right? They really haven't. And so I think the argument is the only way you're going to go more durably overvalued is if other things join the bull market. Even the number 2 crypto asset, Ethereum, still has not even put in a new all-time high, right? So the reason why it's still around that fair value is because Bitcoin's doing what it's needed to do, right? Like it's pulling its weight, but the rest of the market hasn't really been pulling its weight. And again, I think one of the reasons is just because we've had much higher rates and more macro uncertainty this cycle. But even if you look at last couple of cycles, I can't remember exactly, but I think in the 2017 cycle, we didn't go durably overvalued until maybe like May or something. We're clearly beyond that now. So maybe the implication is that if there is an alt season, it might not last as long, especially if you believe in the 4-year cycle. So there's also been this never-ending question of like, when's retail going to come back? I mean, obviously we are retail. We need to own that, but at the same time, like, is there going to be an influx of new people? And until you get that, you're probably not going to see that other thing go, more durably overvalued. I think the reality though is that it's sort of the chicken and the egg, right? The retail comes after prices go up. It's not retail coming that makes prices go up. So look, if Ethereum makes all-time highs and can hold those all-time highs for more than just like a few days, then you might start to see retail come back. But I do think that the very first time Ethereum wicks to all-time highs, I think it's going to sell off. I think there's going to be a lot of breakout sellers on that first breakout. So again, it's just a matter of how we have, if you assume we have, at max 4 or 5 months left at max, right? Then it just means, the season that everyone wants to happen is going to be getting shrunk more and more and more until that happens. So I was hoping Ethereum would put into all-time highs within the next couple of weeks, but that remains to be seen, because I still do think we're going to have I think Bitcoin's probably going to go to its bull market support band in September. So it'd be nice for Ethereum to wick to all-time highs now to get that part out of the way. If we don't do that, and Bitcoin just goes to the 20-week SMA before Ethereum can do that, then it kind of shrinks that season even more, because then we'd have to wait till October, more than likely, for that event to play out. So,
wow, yeah. That's not too. I can wait for October. Guy, what do you got in this last one? Undervalued, valued right, or just good?
Well, not much. I think Ben's right. I mean, we need Ethereum to join the party, and then alts to join the party, and it's in terms of retail, in terms of retail coming, that's something that I wonder about a lot, because I wonder now, obviously, one of the things that's bothered me for the last few years, since the last cycle and since 2022, when it all blew up and went to hell, I really think that was for many people absolutely terminal when it came to their relationship with crypto or how they viewed it. And I don't think that damage has been repaired now. I do think that we are slowly starting to turn that around, because, for instance, all these announcements that we've had, coming out of Washington recently, this what was it? Trump's executive order that crypto could be invested into 401ks. I didn't expect that to move the market, and I don't think it really did. But I think the importance of that is that it will help with legitimizing crypto more in the eyes of people who might potentially invest in it. But at the moment, we're still in a situation where a lot of people, maybe a lot of them who lost bad in 2022, still view crypto very negatively, And there's also the sense that I think even back in 2021, it was still kind of a new thing. It was still sort of uncharted territory. Obviously, people had heard about what had happened in 2017 and in previous bull markets, and were like, "Wow, okay, this genuinely seems like something new and interesting," and it was. And it still is for many of us, but I don't think a lot of people feel that way. And I do wonder whether that combination of, reputational damage from the likes of SBF and, let's face it, many other participants in the industry, coupled with the fact that maybe in the age of AI or whatever, crypto is no longer the shiny new thing, that concerns me. That's what I think may be holding retail back.
Exactly right. And that's why we always preach about utility. And it's a funny thing, utility comes in and people are like, I don't care about that. What's the meme coin? Where's the next contract address? And so on and so forth. So anyhow, everybody, that'll conclude for just the regular show. Now let's get into, and first of all, well said by both. This was great information, things I didn't know either. So now we'll jump into the Q&A. We'll do this for 5 minutes and see what we got. I like this first one. This isn't a question, but Accelerate Profit says, is mental illness a prerequisite to begin or being fading crypto? I thought it was funny because we were kind of downtrodden on the crypto market, but just remember, like, it's all about the time frames. So for me, like, Bitcoin and some altcoins are inevitable. We need these things to happen. And you know that if you've ever, I don't know, used a bank. So I think it's going to be fine, but in the short term, yeah, I'm not saying that everything's going to go up and to the right. I think people get a little bit frothy, and I think that that's just pretty much how it is. And guys, you want to jump in on this one, or just say, yeah?
Look, we've just had a fresh outbreak of mental illness overnight, haven't we? Because Kanye West, or whatever he's called nowadays, just launched a coin, and guess what? It was a total rug pull and scam. Mm-hmm. I know, I'm shocked. But yet still people went for it. So yeah, I think there's definitely a degree of mental illness needed to sort of stick this out, because it's so, it's so up and down. It's so, and it can really, I notice it as well. I've been doing this for a long time. I've been involved with crypto for over a decade now, and I still find that my mood is in many respects often influenced by what the price is doing, by how the market is performing. Yeah. And I kick myself for that, because I'm like, 10 years, I should be better at this by now, but I just can't, I can't help it. I guess because I work in the industry as well, and I'm sort of doubly exposed to it, if you like. But yeah, you need, if not mental illness, you need a sort of thick shell around your brain to stick it out.
Yeah, you're throwing sand in the ocean.
The other thing too, I'd say, is like Ethereum is higher than it was 2 weeks ago. Like, like there's just like I feel like the emotional swings by crypto investors, like, it's really, it's on it. Like, as someone, as all of us, if you talk about it, right? I mean, like, it's crazy how quickly the sentiment can change, right? I mean, like, Ethereum, it just took like 4 years to break above $4,000, and now that it's back down to 4,300, everyone's pissed off again.
that's how it's always going to be. People are going to, and of course, like, what doesn't help is, I hate to say this, I love it, but X, Twitter, or you want to call it, there is it's like constant flow of information that you can get, and whatever you want to be your outlook, you're going to find it because of the algorithm. So I think by people going there, and then I also some different other social media platforms as well. So good way to say it. But next one, this is a good question, and I was curious about this one. What will you guys take profits into? Because at some point we're going to have hopefully we have some blow off top. But what do you take that as you sell? Do you just put it into cash and just leave it there? We talked about this many times. We have. But I'm curious to see if there's any changes. There's been a change for me, but what about you guys?
I think it kind of depends on where in the cycle are we. Like, so if you're in altcoins throughout many years, and if your altcoin experiences a strong rally against Bitcoin, then usually if you're in the middle of a cycle, it makes sense to take profits from that altcoin back into Bitcoin. Just so you can continue to get exposure to the upside and then minimize your downside risk. If you're doing it, like, if it's like December or something, then it might make more sense to take it into fiat or something else, like if the 4-year cycle is actually going to remain intact, right? Like, and if you think about like risk levels or just like the frothiness, when things get super frothy, it's better to go to like cash or stable coins than if like just a single coin is pumping. Like if it's like if you just have a single coin rallying or a few coins rallying, then it makes more sense to go back to Bitcoin or Ethereum, right? Or Ethereum. Like if a few months ago in April, the alt valuation against Ethereum was basically near all-time highs, and so it made sense to fade alt ETH pairs and to be bullish on Ethereum against altcoins. So that made sense to trade alts for Ethereum back then. So again, it depends on like where you are in the cycle, right? I mean, it doesn't make sense to trade for Ethereum if Ethereum's trading at like 6 or 7K. Then if you're trading stuff for Ethereum at that point, you're just FOMOing, right? Yeah. So I think it depends on when. And I would say normally gold is a good a good hedge. I mean, but a lot of times in midterm years, gold also drops like 15 to 20%. The S&P has mixed results in midterm years. There's actually plenty of midterm years where the S&P goes up. So historically, I've done a mixture. I've gone to stocks, I've gone to gold, sometimes I go to fiat. It really just depends on, you know, what denominator people are more interested in. Like, are they valuing their portfolio in sats and US dollars? What are they valued in?
Yeah, well said. Guy, what you got?
Obviously, picking up on what Ben's going with what Ben says about time in the cycle, but sort of broadly, some into stables, which would probably be earmarked for buying Bitcoin, more Bitcoin at some point. My wife insisted that we hire the services of someone who knows what they're talking about when it comes to the stock market, because she found out just how much of our net worth was in crypto, and sort of was like, okay, that needs to change a little bit. So so some of it will go to stocks as well.
Very nice. Yeah, you know what? Don't ever this is not relationship advice, but it's easier to ask for forgiveness than permission, everybody. So just remember that. And then for me, like just what you said, Guy, about the into stable coins, I think there's going to be a switch for me, because I'm not a big fan of putting this into the bank, because I got problems with my banks, especially in Puerto Rico. But that's a whole other story for another time. Lastly, I think this is a good one. I think it's something that we should do. I didn't do a good job at this. What's the compelling argument that the cycle is broke and we're extending? I think we should go the reverse. I don't see it, but generally the sentiment is changing, or is another this time is different. BS, they say every cycle. But is there something that you look at and go, hey, there's something off here? Like, I took a look at the valuations and I'm like, you know what? These valuations aren't inflated like they used to be in 2021, 17, and 13. What's going on? Who wants to take this one?
Well, I just repeat what I said earlier about market structure. I just think we're playing a different game, and there are different players. It's not this weird eccentric little market anymore. And I think that is my argument for why the cycle might be broken, and why this time is different, because there's new money. Wall Street picked up on Bitcoin, and now it's picking up on Ethereum. And we've got the approval of I don't know how many altcoin ETFs coming down the pipe before long. I think that the deadline for most of them is autumn. Some of them, maybe all of them, will fall flat on their ass, but some might fly. We might see Sol or XRP or Link become, the next darling of Wall Street. And when you're talking about that kind of money that's available, that suggests that it could be different. So that would be my argument.
That's a good argument. Ben, what you got?
I mean, I guess show me the price going up in a time where it doesn't normally, and that would be the evidence, I guess. Otherwise, I will assume it's the same.
I'll assume it's a shame. I just don't see it. Anyhow, guys, we're going in extended hours, so that is it for today. Look, if you don't follow Guy and Ben, what are you doing with your life? So there's a link in the description. Check those out. But that is it for this one. Next week, we are on Guy's channel. And we'll see you there in 7 days. So thanks, everybody, for stopping by. We appreciate you. See you on the next one.
See ya.
Thanks, everyone.